Oil prices have rebounded to $100 per barrel, which is largely due to OPEC+. On the one hand, Saudi Arabia has announced that it's ready to cut oil output. On the other hand, if the sanctions against Iran are lifted and Iranian crude returns to global markets, other members of the group will also reduce their production. In other words, there is no point in counting on a rise in supply, while the global economy is increasingly at a risk of facing energy shortages. For instance, yesterday's American Petroleum Institute figures showed that U.S. crude oil inventories fell by 5.632 million barrels last week, much bigger than expectations for a 900,000 barrels drop. All this contributes to a further rally in oil prices, and thus oil is expected to continue posting moderate gains until there are statements on the need to boost production. Thus, Brent crude oil futures rose above the $100 mark on the 4-hour chart for the first time since early August, and this indicates that buyers intend to further push the price up from the support level of 93, and if the price consolidates above the psychological level, the volume of long positions may increase. And in this case, oil will most likely head towards the area of 104 and 107. An alternative scenario suggests a sideways movement along the 100 level followed by a rebound. In the meantime, gold finally managed to recover slightly from its recent steep fall. At the same time, gold seems to be following the foreign exchange market. Its upside momentum was similar to that of major currencies against the dollar, and this again confirms that gold is highly dependent on the US Federal Reserve's monetary policy. Accordingly, the yellow metal is now expected to drift to the current levels in anticipation of Jerome Powell's speech. After all, traders are hoping to receive some clues about the Fed's plans regarding the pace of a monetary policy tightening. Notably, the head of the U.S. Central Bank is set to address the annual 3-day symposium in Jackson Hole, which will start tomorrow. To continue moving up, the quote needs to consolidate above the level of 1,750, at least on the 4-hour chart. Otherwise, it may bounce and return to the low of its downward cycle. Speaking of the Russian currency, the Ministry of Finance is reportedly ready to resume foreign exchange interventions in September, and the Bank of Russia may lower the key interest rate to 7.5%. However, despite all this, the Russian currency continues to trade slightly below the mark of 60 rubles per dollar, and this indicates that market participants do not want to rely on rumors. Moreover, government entities repeatedly made various promises, but they were not kept, so the market situation will hardly change until the Ministry of Finance really starts foreign exchange interventions. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.